Hello friends, today's topic is about split shares. So I hope you like this video because a lot is going on for split shares because of a very high dividend rate that split share stocks or ETFs they offer to their investors. So that high yield is very can attract so many people to invest in those what called split shares. In this video, I will first explain you what is a split share, and then I will also indicate what I would follow, a strategy that would be good for me. At least for me, it is proving, and the strategy that I should follow to invest into split shares. So there are a number of points that I will discuss. I want to tell you here that I'm not a financial advisor. This is my strategy. So you do your own research, look at the NAV, whatever you want to do, it's your money, your decisions. Don't get influenced by this video. This video is only for entertainment and information. Split shares are a combination of two kind of shares. One is preferred share and the other one is common share. What actually happens, funds manager, when they start their fund, they offer preferred share to the investors at a fixed dividend rate with the guarantee that at the end of the time period of the fund, the actual value, the original value of the preferred share would be returned back to the investors. So during the time period, investors have provided investment to buy, and those who have bought preferred shares, they get a fixed dividend rate. This dividend rate does not change over time. It is fixed at a certain time for a certain time period. Opposite to this, common shares are those shares that have fluctuating dividend rates. So the common shareholders who buy those split shares or the unit shares, they receive normally higher dividend because the fund managers, they use common share investors' money plus the preferred share investors' money, and they do invest into the stocks market to buy a bunch of stocks. So generally speaking, when market is doing good, common shareholders, they not only get higher dividend compared to preferred share, but they also receive what is called extra capital appreciation, because if the stock market is going up. However, if the stock market goes down, they might get less dividend or they might see a decline in the share prices of their common share. The fund manager of a split corporation, they don't only invest in stocks and let the stocks appreciate or depreciate to generate dividend, but actually they follow an active strategy. And the active strategy normally they write covered call options. They can write covered call options in at money or out of money or in the money. If it is out of the money, then it means that they charge the price, they set the price of their stocks higher than the current market price. Or if it is in the money, they write the call option contract below the price of the current market price. Or if it is at money, means what is the market price is being offered for the stocks a month from now or so. So by doing covered call options, the corporation earns extra premium, and that's how it's being distributed. To be able to provide fixed dividend rate that has been promised to preferred shareholders, the first distribution goes to the preferred shareholders. The fund decides what should be the NAV. So NAV is net asset value, means that whatever the assets of total assets of the funds minus all the liabilities, so that is called net asset value. So if you take the example of some split share like Bank Corporation, which is symbol is BK, or 15 split 15 Financial FTN, or LBS Life and Bank Corporation. They're all split shares. For them, the value set for the NAV, which is NAV, is $15. If the value of NAV or the unit NAV is less than $15, then no dividend will be paid to the common shareholder. So even if NAV is less than $15, dividend will be paid to preferred shareholders. But again, preferred shareholders get much lower return on their investments compared to common shareholders. So this means now we are clear that a split share corporation generates dividends by borrowing against the common share value investment, total value of investment, through preferred share, and invest into stocks, and it gets its stocks dividend, plus it writes covered call options and gets extra premium from there, and first pays to preferred shareholders, and then if as long as NAV is greater than 15, the rest is being distributed to the common shareholders. If the stock market is doing good, and if NAV is going over 15, for example, 16, 17, 18, means fund is doing very well, and common shares will see an increase in their share price, so they might also see a capital appreciation in there. So now I move to the next part of this video and show you that what strategy I would follow to invest into split shares. The first point of my strategy is I want to see where the fund is being invested, what kind of stocks the fund holds. So I first go to the fund's original website and look what are the fund's holdings. And I prefer mostly, if with my age group, I prefer mostly blue chip stocks. So if the fund is investing into blue chip stocks, I would say, yeah, that's a fund I should look further. For a person who is young and has a lot of time and doesn't need money and can take the risk of some declines in the real value or original value of their money, they can go for growth stocks as well. So once I'm convinced that this stock is good for me, then I look the second thing. And the second thing is look at the NAV of the fund. So net asset value. If the net asset value is substantially or significantly greater than the threshold value, so suppose if I'm investing in BK, Bank Corporation, and I go to a Quadrest website and see the NAV value, unit NAV value, if it is, it says that if the NAV is 15, below 15, no money, no dividend will be provided. So I will look that current NAV should be at least 16, 17, 18, or even more than that. So that would say that, okay, the fund is stable, and over time, even if there are some ups and downs or some crashes comes in the stock market, fund will provide me enough dividend. So that's my second point. My third point is I will look at the fund's history of dividends payouts. So suppose the fund is in practice for last 10 years. So last 10 years means there are 120 months. And if the fund is providing every month the dividends to common shareholders, so I will look at the history of 120 months. I'll look at how many months out of those 120 months fund has missed the payments. If out of 120 months it has paid only few months and didn't pay for most of the months, I would say the fund is not stable. But if the fund is missed only a couple of months of dividends, I can say that, yeah, the fund is good. Maybe there is some crash came. For example, if the fund I'm saying about the BK fund, or there is another fund, is a Life Bank LBS split fund offered by Brompton. They are strong funds, and I'll see that they only missed a couple of months during the COVID time, and then after that they didn't miss any of their payments. So very important to see how many months out of their lifetime they miss payouts of the dividends. Once I'm convinced that NAV is good and the fund has been doing good since its inception, didn't miss many months of dividend payouts, my next step would be to look at their return, total return. So what is the movement of split share, common share price over time? Once I am convinced that everything is good, the fund, I like it, return, I will look, what is the dividend rate I'm getting every month? Is there any price movement going up, down? And if I'm convinced that, okay, I'm happy with the at money, out of money, or in money covered call strategy of the fund, once I'm satisfied, then I will like to invest in that split share. But again, before investing, I will decide myself that, okay, how, based on the historical all that analysis, I will say, okay, how many months I can live without having dividend from this split share. If I say, okay, I can live happily for 4 months without dividend coming from this investment, then I will say, yeah, okay, go ahead, because historically data tells me that this fund was unable to pay dividend for maximum for 4 months consecutively. So that's another final thing for me. One thing I will still avoid, I would never, ever go to a fund which has beaten down prices. There are many funds in the market which are beaten down. They offer even 50% yield per. In 2 years, you are doubling your investment. This is not the investment. I say don't get trapped by those funds. Be careful. Do your research. Look at the fund. Look at the history of the payments. Look at the stocks they invest in, and then don't get trapped with a higher dividend rate. I hope you like the video. If you like it, subscribe the channel, like the video, share it with your friends. This is my own portfolio. I have a couple of split shares in my portfolio, in my RSPs, and also in TFSA and other private accounts. One day maybe I would also make a video and discuss my own portfolio of split shares. Till then, bye-bye.